Okay, hey everyone, it's Michael Valtos here, and welcome to the Orderflows Inner Circle weekly webinar number 16. This is part 3 of the flip. Now, if you haven't downloaded the flip yet, you can go to the members area and download it to your hard drive, and after you have it on your hard drive, just click on the icon there. It will automatically self-install onto NT7. You have to make sure that you have your NT7 closed at the time, then install it, then reopen your NT7. You know, over the weekend, NinjaTrader announced that today, November 14th, would be the official launch of NT8. You know, this indicator has been in the works for a while. That's why we worked on it first for NT7. We will do the upgrade to NT8 probably in the next few weeks. Right now, we're working on another set of indicators that once we get that done, then we'll catch up on this, but definitely before January, and you know, we'll have it all on NT8. You know, honestly, I'll still be using NT7 until January. I said I usually we got Thanksgiving week next week, and so I'll probably be off all next week, and then obviously the last 2 weeks of December, December 19th through the 30th. You know, a lot of exchanges are closed because of the holidays. You got Boxing Day on the Monday, and you've got, and usually the following day is closed as well. And a lot of exchanges are closed or on half schedules, you know, half days. So there's, you know, I'm really not expecting much trading going on into the end of the year. You know, you do have the Fed announcement in December, and everyone is figuring that they'll raise rates, so we'll see. You know, it could be an interesting December, even though we do expect it to be a shortened trading month. And you know, today what I'm going to talk about, I'm going to follow up on the last presentation on the indicator on the flip. And one of the things that I want to talk about again are the settings, okay? And you know, I'd explained, you know, there's highly liquid markets, medium liquid markets, low liquidity markets. You know, highly liquid markets, you're going to want to use more generous settings, and on low liquidity markets, you're going to want to use tighter settings. And the reason being for that, right, you can't treat the volume that's traded in the mini Dow the same as you would in the ES, right? You just can't, right? I mean, the ES in a 1 minute period can trade, you know, 2,000, 3,000 contracts, whereas, you know, in the mini Dow, you could trade 150. So you know, there's a big difference. And when you're analyzing volume traded delta, you know, the numbers are just inherently different. That's why you're going to want to use tighter settings. And you know, like I gave yesterday in the previous presentation, my settings. You know, these are very generous settings. Like I said, you know, usually in the past I would use 1 in 15. You know, I should have corrected that. It's more of 1 in 15 or 1 in 25. That's for very tight, you know, low liquidity markets. You know, we have the defaults on the indicator set at 5 and 25. And there's a reason for that. You know, 5 and 25 is a number that, or a set of numbers that actually can work in a lot of different markets. I'm going to show you today some markets, okay? You know, just really quick, okay? This is, you know, first I'll start here. This is, you know, today here in the crude oil, okay? This is an 8 range chart. And again, you know, it's early morning. Again, I'm not a big advocate of trading crude oil that early in the morning, although, you know what, when Europe opens and Brent crude, you know, the old ICE open used to be around 4 o'clock Chicago time, which is when Brent crude would start trading on ICE, and you know, that's where the volume really starts to come in on the crude. There's a lot of arbitrage between WTI and Brent, and so there's you know, again, you know, there's flip A, there's flip B. Flip A is going to be the fatter triangle. Flip B is going to be the fatter triangle. Flip A is going to be the smaller triangle. If you go to the indicator settings, you know, I think in the first presentation I showed you them all the same, but you know, this, I'm going through the default settings on these. So 5 and 5, 25, 25. for A, same for B. And you see the flip A, it's the 4-point triangle. The flip B is the 8-point. That's why you see this is a flip A signal, this is a flip B signal. So I treat them the same. It's just that flip A is usually one right after the other. Sometimes, flip B is going to be, the market takes a breather, then the selling comes in. Or if it was a buying signal, it would take a breather, then the buying comes in. And, so this is settings of 5 and 25. This is the default settings. Another one I wanted to pull in really quick. This is the mini dial this morning. Make this bigger here so it's a little easier to see. And honestly, there were some decent signals this morning. Again, this is early in the morning. I don't advocate trading at this time of the day in the U.S. products, but there were honestly there were some nice trades this morning. This is a flip A. This is a flip B. Flip A, and then a flip B. These are flip B sells. Okay, and this was a nice. Yeah, you had a nice little winner there, nice little run up there. Then you got a nice, sell signal here, even if you missed it. Again, came in a little bit later to confirm it. That's a nice move. Well, the 80 level down to, it's literally just falls over. There's not any. You have this little retracement here, but after that, it's just all straight down. Until you get this flip B buy signal here. Then you got a couple little buys here. There's one worked out a little bit better. These went up, then they just came right back down. This is the point of control signal. And this is the, you got this sell that didn't work out, this buy that didn't work out, but you got the point of control right there as well. So again, you got a bullish signal followed by a bearish signal. Then you sort of got the same thing going there. What I wanted to show you today, hopefully, maybe there'll be some signals today that I can screenshot for you or make a video later, but when you have, this is point of control at the extreme. See, 1 1 1 1. So I know that it's at the extreme, and you can see the settings there. In case you want to know how to set your settings, in case you missed the video or you forgot how to set your settings for the point of control trader, it's just all 1 and 1, 1 and 1, 1 and 1. But when you start getting, point of control, and then you get the flip indicator, either at the same level, the same bar, or a bar after it, it's usually quite strong. I didn't have time to take a lot of the screenshots from last week, but I'm hoping today there'll be a good example that I can share with everybody. And like I said, it's 5 and 25 is the default settings. Okay, and that's where you should start. If you're going to start messing around, if you're going to start experimenting with different settings in the markets that you follow, start at 5 and 25. Again, if it's a low liquidity, maybe you can go a little shorter. If it's medium liquidity, you can go a little higher on the back end, on the delta numbers. And if it's extremely liquid, you go a bit higher, 200. And what I'm putting in the download section today is I forgot to write it. Actually, was it's my cheat sheet for the indicator. Okay, and it's going to be in the download section, but I'll just really quick I'll open it up here. It's a PDF. Let me see if it. Give me one sec here. And I talk in here specific settings for specific markets. So crude 1 and 25 or 5 and 75 or 5 and 100, and on the types of charts that I run them on. And I get into the settings, flip A, flip B. I generally always keep the settings the same. If 5 and 5 and 25 25 on A, B will also be the same, because the reason for that being is, I want to at least, I treat them the same, okay, whether it's flip A or flip B. But flip B, what it does is it just lets the market catch its breath, okay? So like sometimes, someone comes in and buys a lot, and then immediately there's a seller there waiting and sells it to them and moves the market back down. But sometimes, the market moves up very fast. It takes a while for traders to react, okay? And, that's why I treat them the same. So, the other thing that I wanted to explain is, so again, if you wanted to change, the settings, right? It's set at default 5 and 25. Say you want to set it to 5 and 100. The 100 is the delta, okay? You'd keep the intensity the same, and the second part is the delta. So if it's 5 and 100, it'd be 5, 5, 100, 100, and then 5, 5, 100, 100. So, for example, 1 and 25, this is how it would look. 1 and 25, 1, 1, 1, 25, 25. 3 and 25, 3, 3, 25, 25, 3, 3, 25, 25, 5, this is the defaults. 5 and 75 is how it looks. 5, 5, 75, 75. 5, 5, 75, 5 and 100, 5, 5, 100, 100. Now, again, in the first presentation, I was talking about settings of 15 and 15 and 100, 15 and 200. Yeah, you could use them. It just opens up a bit more, even though I wrote my preferred settings, on this one and this one. Again, it's, if you're using 15, it's more generous. You're going to get slightly more signals going off. So, what I want to talk about, again, you should read through this cheat sheet. I wanted to make it a cheat sheet, and it ended up being 8 pages. I think I sort of added part of the trading guide into here, but explaining the intensity levels. Okay, so on the settings, right, you have intensity 1 and intensity 2. It's going back here, you got intensity 1, intensity 2. And what the intensity, the values, right? It's going to be between 1 and 99 are the numbers you could enter. 1 being the strongest, 99 being the weakest. Honestly, you're not going to go above an intensity level of 15. That's about as generous as I give it. Honestly, if you're going above 20, 25, there's not much point in using looking for a flip, because it's not really a flip. Just it's borderline normal trading. But just keep in mind, the smaller the number, the stronger it is. The higher the number, the more generous, or I won't say weaker, but the more generous it is. And what it does, it measures the strength of the buying and then the selling, or the selling and then the buying. And I keep them the same because I want to see the opposing value to be at least equal to the initial value. So when I talk about intensity 1, intensity 2, I keep it the same, right? Because say I'm using intensity of 5, I want to make sure 5 on the way up, I want to make sure it's at least 5 on the way down. Now, that said, possibly someone asked me, if I'm looking for the market, right, to go up, and then the selling to come in and be stronger, shouldn't it be a higher number? Well, yeah, it can. But initially, really what I'm more interested in is the market popping up, in this case for a buy, for a sell, the market popping up, and then someone coming in with at least the equal amount of selling to move it back down, and ideally move it lower. So, I mean, I can understand why that question was raised. Shouldn't it be stronger? Well, it should at least be equal. I mean, yes, you can adjust if you want to experiment, you can. Now the delta values here, the next ones, the delta 1, delta 2. It's in value between 0 and anything. I say 500. It's actually unlimited, but there's no point in being as high, being so high as unlimited, or 2,000, 3,000. Because very few markets trade that number of contracts, so I can't say it's unlimited. It's open-ended, but you can't say it's unlimited because the market's not going to trade an unlimited amount of contracts. And in markets with heavier volume, you're going to want to have a higher number for delta 1 and delta 2. And the reason being is just because it trades more volume. That's why you see on markets that trade with smaller volume, you see values 25, 15, or 25. Going back to this page, 5 and 15, 5 and 25, as opposed to highly liquid, 200 and 100. And the reason being is because, like I said, on thinner traded markets, you're going to get less volume overall. So I mean, you can't analyze it. If you set that setting to 100 on, say the mini Dow, it would almost qualify, because each a bar trades maybe 200 contracts in general. That half the time it's trading 100 or less. It's going to give, if it's right around 100, it's going to give a signal, which is not really what you want to do. Now the plots, you can adjust the plots. Again, going back to the settings on some of the things that you can adjust. Okay, just real quick here, cash just opened here, and I'm going to show you something here. But if you go back to these settings, you can adjust these, right? So if you're using other indicators that are using a triangle up and a triangle down, especially a red triangle down, you might want to consider changing it, especially like the divergence signal is a triangle, a red triangle up, or sorry, a red triangle down, at a high of the day. But again, one of the things I wanted to show you is this. When you get point of control in a bar, right around where you get the flip, it's quite strong. I'll say it's confirmation or confluence, but you're getting the signs in the market. Okay, so it's like the market rallied up. You put in some heavy volume, and then wham, sellers came in, and you can see this market went from 18,860 area down to the 45 area. Here, this one, not really. It did go up a little bit, came off, but again, this area here is right around the cash open. Here you're already coming out of the cash opening period. So again, you could change those settings or the colors if you want. Again, a flip A will print a 4 the PX pixel triangle. Flip B will print a bigger one, an 8 PX triangle. And again, it's up to you if you want to make them the same size or make them slightly different. It's better for you initially to keep them a little bit different, so you can at least see. You can also, I believe, it's set up that you could turn it off if you want to only look at flip B's or flip A's. Change that true to false. And again, you could go inside the plot style. Say you want to change it from a triangle, you could change it to a line, a dot, cross, a block. It's up to you. So you could adjust it to however suits you best. Okay, so just talking about the settings that I gave you in the previous seminar are generous. Okay, but they will work. Like I said, when I originally, defaults are 5 and 25, but when we first started using this, without software, we had it very tight. 1 and 15, 1 and 25. So yeah, let's just run through some charts. I showed a lot of charts. I showed mostly bar charts. Actually, I didn't show order flow charts. But so this is DAX. Again, this is what I say, 1 and 25. And you can see it here, right? The volumes in these bars are not even 100. Very rarely do you break 100. So if you're using a setting of 100, then it's taking in all this volume that is going to give you, possibly give you signals on a lot more. By making it 25, it's only using it's looking at volume where how to describe it. It trades less volume, so having a small number, I can't describe it. I'm trying to put it in easy terms. If okay, see here the deltas, right? -7, 15, -7. Total volume is 137. The main factors of what it measures is the delta, the max delta, the min deltas. So and obviously takes into account some volume, But if you're going to be getting small numbers like this, small deltas, it's because you have small small volumes in general. Okay, for example, I've got, okay, so like you see here real quick, 7, 15, 7. Like here's a bonds, right? And you got 560, 95, 560, 600, 123, 600, 299, 352. So it's more volume overall. That's why you're going to use higher the higher delta numbers rather than the smaller delta numbers. So if you you go back here and you set the delta at 100, it's going to sort of allow all these other trades in that it probably shouldn't. So here, this is a flip A, so it's kind of small, and it's measuring this the flip and all this stuff right here, and the market pops up and it sells off. Here was a flip B buy, so you saw the selling come down. It did rally back up on this next bar and giving you the flip on this one here, and it was a nice move, a nice little move higher. What do you got here? This is, well, first you had a flip B buy here. I didn't see what was before it, but then you got the flip A sell here, and it just sells off quite nicely. So a bond market, right? The bonds, the ZB is a market with medium to heavy volume. 10 years definitely very heavy volume, but ZB can be medium at times to heavy. Okay, and but I'd lean more towards heavy. It's more medium on slower periods. So here you got buy, flip A, flip B, and then you got a nice little pop up. This one, sort of ran into a little trouble. Flip A, then a flip B sell, and then a flip B buy, and finally corrects itself and gives you, you're able to get back what you probably lost on these other two trades. This was a flip B buy, did sell here, didn't work out, and came back with buy, and he started going up. And this was a sell here, flip B sell, on this little move up here, and then boom, it came back down. Now again, these aren't just random days. This is 26, 27. It was the next day here. This is also the 27. I think this came after. This is the second part of the 27. This is the earlier part. Got the slides backwards. And then 26. These slides are a little messed up. So this one should go back there. So it should be. My days are in reverse here. So 28, 27, 26. I tried to keep them in order. Then, okay, so mini Dow, right? Let's look at mini Dow. I showed you the mini Dow earlier where you had the 5 range, right? This was the chart I showed you earlier, right? Where you had this, this is in real time right now. So you have the, these buys here, with the point of control, the sell, this nice sell here with the point of control. And then, it finally stopped down here at 825 when you could be getting short. You had plenty of time up, in here at, at least 855, 850, 855, even 860. It was trading back and forth in there, down at least to the 825, 830 level. Then you got to buy and a sell here, which unfortunately sort of canceled each other out. But we'll come back to this chart later when see if there's anything else. But I'll show you this chart. These mini Dow, the 1 in 25 chart. Okay, so you're just going sideways, then boom, it happens here. You get the nice move up. Nice move up coming, boom, you get a sell signal, and it comes off. What are these? I hope I have these days. Oh, this is all like around the same day. The days, I think my times are a little backwards though. Then here you got this little buy here, it goes up. This is a little even earlier. The sell just went sideways, but it was sideways to slightly lower. This one didn't really work out. You got the initial jump up, and it just sort of came in, rotated back and forth. But I still want to show you that. This was a This is on the day before. This is November 1st. The days I just showed you, the mini Dow, were November 2nd. Again, you know, got this little move up, and then got the sell, and we went down. It's not the same chart, is it? Oh, it looks the same. You got this little double top here, and then you got the sell here, and then we just, you know, again, we sold off again. It's a move from, you know, what are you talking? 915, 914, you know, down to 9, you know, below 900. You know, this is, you got this flip buy, flip B buy, and immediately turned around on you, flip A, flip B, and you just, you know, it just fell over. You know, you're talking the 950, you know, 946, 948 level down. You know, down here you're trading, you can see 928. Then crude. I'll show you some crude charts here. This is 8 range, 5 and 75. Okay, these are bar charts actually. Just to give you an example, you know, this first one worked out, the second one didn't. But you know what I want to point out is, you know, where to place your stops. Okay, you'll be placing your stops generally below the bar. Or maybe give it a tick or two, but you know where your stop is going to be. It's not going to be, you know, you have this signal bar here, and you know your stop is just going to be somewhere in here. It's not going to be way down here. It's going to be very tight. So if the trade doesn't work out right away, you're out. So what day was that? That was the 24th. Okay, so this is the 25th, the next day. You got this little buy here, works out. This little buy, you know, worked out. Then boom, you get a sell signal here later. You know, a few minutes later. And again, it's a nice, you know, it's a nice 50, 60 cent move. This one, you know, again, you definitely probably would not be trading this one or this one, because you know this is right after, this is the, you know, the 26th, which I believe was a Wednesday. You know, that's 9:30. That's when the inventory numbers come out, and you know, come on, you're not going to be trading crude the minute the inventory numbers come out. You know, you're going to wait for it to settle down. You know, here at after 10 o'clock, you get a sell signal, and look at it. You know, 49.90 area, more or less, to where? You know, the 49. You know, you got another sell signal here, which, you know, you're not going to take this because you should already be short. You know, if you got out here at 49.60, you're probably lamenting it, but you know, it traded down, you know, below 20, down below 10, actually down below 49 even. So that's almost $1 move. This was the 27th now. Yeah, I mean, 2 o'clock you're going to be trading crude? Most likely not. You know, you got these little sells here. This is 7:30. You know, these don't really go anywhere on you. This one failed here. And later in the day, that one failed. So, you know, not every single trade is going to work out. But you know what? You know your stop's going to be. You know, this trade, you know, like here, this one, you know, just looking at it, it started out. And then it just sort of came right back on you. So, yeah, it's an 8 range chart. So, you know, if you have your stop just right here, you know it's not working out. You know, here, again, it just, you know, starts coming off, then just comes right back against you. You're stopped out. You're not sitting up here 20 cents away wondering, you know, should you be getting out now? And this is the 28th. Again, you know, there's one signal. What do you got? You know, you're getting a short here at 49.60. What does it do? It trades back down to, you know, the 49.20 level. This was Monday, the 31st, Halloween. Again, you know, it looks beautiful, but honestly, I don't think most people are going to be trading this time at, you know, just before 4 o'clock in the morning, trading crude. Give you a little buy here. Yeah, you know, it's about 20 cent move before coming back and stopping you out. Honestly, I think, you know, I probably would have just gotten stopped out there. Okay, so this is November 1st here. You know, these little buys, you know, this little buy, you know, starts working out, not working out, coming in. You got to buy, and then immediately with a sell signal right afterwards. So this buy, if you took this buy, you got a sell signal, you got to be getting short, at least getting out. Ideally get short. You know, it's a move from 49.85 straight down. You know, then came back up to 70 before coming back down and down again. So, you know, hopefully you could have got, you know, 40 cents out of that move, 50 cents. This one, nothing. You would have got out of this one. You could have got something out of this one. Nothing. These probably not anything. November 2nd. Again, this period here, all this stuff. This is the petroleum numbers, the inventory numbers coming out. So you're not going to be trading, even though it's easy. Wow, 46.20 down to 45.20. This is the greatest thing ever invented. But honestly, you're not going to be trading that. So I just put it in there to show you. But in the next slide, I'm gonna expand this period here after the data came out, because it looks, on this chart you can't really tell because you have this $1 move here, so that all this area here is kind of scrunched up. But you can see on this next chart, right? It is giving you some moves here from 45.30 down to 45.10. This one doesn't work out. This little cluster here, it's making a 10-cent move here. It's making 15 cents here. There's one late in the day again. After it should start running after 2 o'clock. It's not really a time I'm looking to trade crude. This one here, this is overnight. Again, you're not going to take this. This is November 3rd. Again, this one, it's borderline. It's right around 6:30, 7 o'clock. But it was a nice one. It literally caught this whole move, a buck and a half. 45.70 down to 44.50. You got a sell signal here, but again, you got a sell signal here. You just made a massive monster move from 45.70. You're trading 44.50, and you get a sell signal. It's at some point this move's going to be done. So you could take this one maybe with a grain of salt. You could say it went from 50 down to 40, but that's nothing compared to this entire move. And Friday, this was non-farm payrolls day, November 4th. This area in here is right around the 7:30 time. So again, are you going to be trading crude during that time? Probably not. Honestly, you shouldn't probably be trading at that time. Let the market settle down. And if you did, you're rewarded. You got the sell that didn't work out, but it met with buy. Flip A, flip B, and it just shot up from 44.15. It popped up to 70 before coming back down, retracing back down to 20, and then going back up, making another new high at 44.80. Give you another buy here. What did it do? It went up. Okay, this one, not more keyed in on this one because this gives you the move. This one's already in the move. And then late in the day, it's Friday afternoon. You're gonna be taking a trade, after 1:30. Who knows? Most likely not. And then lastly, some bonds. Again, this is a 5-range chart. Sorry, a 4-range chart with a setting of 5 and 200. Okay, so what do you got? This is October 26th. You got a sell here. You're getting short somewhere around 164.08. Worst case scenario. And what does it do? It trades below the figure 164 even comes down to 24. It just trades sideways on you. So hopefully you could have got you'd be looking somewhere below 164 even to get out. Then the 27th, it gives you this buy. This one didn't work out. The sell didn't work out. It just came right back on you really quick. But then you got this buy. You could have got a few bars up. This one didn't work out. This one didn't work out. But again, you're not having stops that are so wide. When it doesn't work out, right away. And again, your stop should just be behind the high or the low of the signal bar. The high if it's a sell, the low if it's a buy. And then later, after you get chopped up in this little area here, you got a nice little buy here. 162.08 goes all the way up to 15.16. And then on the 28th, the next day, what do you got? You got this move from 162 even up to 12. and again from 10 up to 16, 17. So it's giving you opportunities here. This is the 31st, Halloween. Monday you got the sell. Well, this is early. I don't know if you'd be trading it on a Monday morning, but at that time, there's a lot of stuff going on with the election and everything. So the markets were quite active because it was just a week ahead of the election. This sell didn't work out. Back up here. This day I put in there November 1st because there's nothing. This trade you're not going to take. It's too early in the day. It's 3 in the morning or something like that. Yeah, the same charts. Then what do you got? November 2nd. This first trade didn't really work out. It just came right down on you really quick. This trade, if I would have stopped you out, this trade, you gotta be, who knows, if it depends what type of take profit you're using. Maybe you could have got something out of that. If not, it would have stopped you out. This one stopped. This sells failure. This buy, sure, you could have got something out. Then you got a nice move here a little bit later. We're talking 163.22 down to the 163.10 area. And November 3rd, nothing. Again, this one right ahead of 2 o'clock. Again, you shouldn't be looking at taking any new bond trades right before the cash close. Then non-farm payroll day. This was 7:30 when the number came out, but here 8:15, 8:16, you got to buy. And it could have given you something there. The sell started to. This buy definitely could have given you something to get out of there. So there's something to be had out of this trade, something to be had out of this trade. This trade maybe not. It depends how good a trader you are and what your profit targets are. If you got a very tight profit target, yeah, you could have got something out of it, but probably not. I think if I would have been thinking of scratching this trade, especially when you see this bar coming right back and you got a buy signal there. At that point, you're thinking maybe I should, don't let it go up to your stop to stop you out. When you see this signal here, you're just getting out, relatively soon. The bar opens here. If you get in around the bar opening, trades down, and the next bar trades right back up. You got a buy signal. Don't wait for the market to come all the way back up in here to stop you out. Just get out now. You should be getting out anyway to get long. But so your loss is limited there. So where's my chart here? So let's just really quick see how this mini Dow is doing. So again, you had this nice sell signal here with the point of control flip A, flip B actually giving a signal at the same area, the same bar. Then you had a buy here, it didn't work out, and the sell didn't work out. You got these points of controls. Okay, they're not holding. But again, if you can mix this, with the point of control, trader, giving you extreme point of controls, it's quite effective. So, again, go back to the members section and download the, the cheat sheet there that I put in. So, maybe I can't include it on here because it's quite a big file, and some people's emails filter out size of files. But just go in there and download it, and again, it's something you should try the different settings and see what you're comfortable with. Do you want more trades? Do you want less trades? And go from there. So thanks for watching that, and any questions, definitely let me know.